For many doctors in the midst of or preparing to leave residency and fellowship, student loans are one of the largest and most immediate financial decisions to address. And in most cases, the question becomes, should I refinance or should I pursue student loan forgiveness? I'm Josh Friedlander with Ariscard, and while that seems like a straightforward choice, it's usually much more nuanced than it appears. Because this decision isn't just about interest rates or total cost, it's about how the decision fits into your broader financial and career path. At a high level, most doctors are choosing between two directions. One is pursuing some form of loan forgiveness through income driven repayment programs. The other is refinancing privately, typically to lower the interest rate and pay the loans off more aggressively. On the surface, refinancing often looks more attractive, lower rate, clear payoff timeline, less total interest over time, and ambiguity around forgiveness optionality into the future. But what often gets overlooked is what you give up in exchange. When you refinance, you're also giving up some flexibility. You're committing to a fixed repayment structure, regardless of how your career evolves or how your income changes over time. On the other hand, forgiveness-based strategies tend to provide more flexibility. Payments are often tied to income, and there may be options if your career path changes, but they can come with higher long-term costs and more uncertainty. So the real decision isn't just which option is cheaper, it's what trade-off you're willing to make between cost and flexibility and clarity around the future. There's also another layer to this that often gets missed. Your loan strategy doesn't exist on its own. It oftentimes will interact with other parts of your financial and personal picture for the future. So if you're pursuing income driven repayment, your taxable income is going to matter quite a bit. That means different decisions around retirement contributions, compensation structure can directly influence your loan payments. At the same time, your loan payments affect your cash flow, and your cash flow influences what feels manageable from a lifestyle standpoint. So, when this decision is made in isolation, it can lead to unintended consequences. Refinancing because it looks cheaper without considering how it affects flexibility earlier in your career, or pursuing forgiveness without fully understanding how it interacts with taxes or long-term planning for yourself personally or for your career. Also, there's an element of timing that is present. The decision you make early on can shape your options going forward. Some paths are easier to adjust than others, and once you refinance, for example, you generally can return to federal payment programs. So because of that, it can be helpful to take a step back and look at this decision in context, not just where you are today, but where your career might go, how your income may evolve, and how much flexibility you want to maintain. The goal isn't necessarily to choose the perfect strategy immediately. It's to understand the trade-offs clearly enough to make a decision that aligns with the broader direction you're trying to set. This is one of several decisions that tend to come up as you move from training into practice. We've put together a series of videos that walk through these different areas, things like income, taxes, contracts, and how everything tends to connect with one another. We've also outlined these in a simple transition year planning checklist that brings a lot of these elements together. So if that would be helpful, you can find in the description below. And if you'd like to follow along as we continue releasing content around this, you're welcome to subscribe here as well.